Good morning, dear students. So let's start with financial management, today's class. Okay. Now, today we will be working out the problems on capital structure decisions. So, dear students, what I first would like to tell you is that you better have a calculator with you, okay, so that you can work out the problems clearly. Now, I was telling you in the last class about capital structure. What is this capital structure? Dear students, see, you can expect a 10 or a 15 mark question on the computation of EPS, that is earnings per share. So you can expect a 10 or a 15 mark question on earnings per share. So kindly concentrate. This happens to be an important topic. And in the last class, I was telling you that the capital structure of any organization can be either entirely in the form of equity shares, or it can be completely in the form of debentures, or it can be a combination of equity shares and debentures, or it can also be a combination of equity shares, preference shares, and also the debentures. Now, dear students, let me tell you very clearly once again. So, please keep in mind that any company, whether it is in a position to make a profit or a loss, it must pay a fixed percentage of interest to whom? To the debenture holders of the company. So, in case they have raised the finance through debentures, they have to pay a fixed percentage of interest, which is called as debenture interest. And then, dear students, if you have raised your capital through the preference shares, then you have to pay a fixed percentage of dividend to the preference shareholders. Okay. And apart from that, after you pay the dividend for the fixed dividend to the preference shareholders, the amount that is remaining, that can be distributed among the equity shareholders. Now, dear students, let us immediately start with the problems. So as I told you, computation of EPS can be an important question in the examination for 10 or 15 marks. Now, dear students, if you can look at the slide, capital structure is a combination of different sources of finance. It can be equity, debentures, preference shares, etc., for meeting the overall operations of the company. Now, dear students, have a look at this. This is a specimen format for computation of EPS, that is earnings per share. What you need to do know is, first of all, in the given problem, you have to identify what is the earnings before interest and tax. EBIT is nothing but earnings before interest and tax. That is, the interest is not yet been deducted, the tax is not yet been deducted, so that is EBIT. Okay. Now, from this EBIT, dear students, you have to reduce interest. Okay. So, on what are you going to compute the interest? You are going to compute the interest on debentures. Okay. Please keep that in mind. You are going to compute the interest on the debentures. And after deducting the interest, you will be getting something called as EBT. EBT is the earnings before tax. So once again, first you will be having the earnings before interest and tax. From that, you have to reduce the interest on debentures. Then you will be getting earnings before tax. Then you have to reduce the tax. Okay, so the tax percentage will be given in the problem. You have to reduce the tax component. Then you will be getting earnings after tax. Okay, so dear students, I hope you're clear. Okay, so after earnings after tax, you have to reduce the preference dividend. Okay, so preference dividend is nothing but the dividend that you have to pay towards the preference shareholders. Now, after reducing the preference dividend, you will be having earnings available to the equity shareholders. As I already told you, see, after you get earnings after tax, you have to first reduce or you have to pay the dividend to the preference shareholders. After you pay the dividend to the preference shareholders, you get something called as earnings available to the equity shareholders. From this, you have to reduce, okay, the preference dividend, wherein you will be getting earnings available to the equity shareholders. After that, you have to divide it by the number of equity shares. Okay, so when you deduct it by the number of equity shares, you will be getting EPS. Okay, so dear students, EPS is nothing but the earnings per share. So this is what you people have to know with regard to the problems, and I think I will straight away start with the problems. One second. Yes. Sorry. Yes. Yes, dear students, I'm starting with the first problem. I think all of you are understanding. Let us start. Look at this first problem. Dear students, it says that B Limited Company has a share capital of rupees 1 lakh. So, what is the existing share capital of B Limited Company? It has 1 lakh worth share capital divided into equity shares of 10 each. That means to say, at present, B Limited Company has a share capital of 1 lakh rupees, which is divided into equity shares of 10 each. Now it has a new plan. What is the new plan of this B Limited Company? It wants to invest 50,000 rupees in a new machinery. So, what is the existing plan of B Limited Company? It is thinking of investing 50,000 rupees in new machinery. Now, for investing 50,000 rupees in the new machinery, they are having different alternatives. What are the different alternatives? Look, dear students, look at the first point. They want to issue 5,000 equity shares of 10 each. Okay. Now, see, don't get confused with the first statement. See, B Limited has a share capital of 1 lakh divided into shares of 10 each. This happens to be the existing capital structure of the company. But as of now, what is the new plan? They want to invest 50,000 rupees in a new machinery. Now, for this investing of 50,000 rupees in a new machinery, they are thinking of three different options. What are the three different options? One, they want to issue 5,000 equity shares of 10 each. So, 5,000 multiplied by 10, you get 50,000. Again, they have a second option to issue 5,000 preference shares of 10 each. That is nothing but 5,000 into 10, again, which will give you 50,000. And the next one, to issue debentures for 50,000 rupees. Okay, that is again the next option. Now, they've also given you the present EBIT of the company is 40,000 per annum, and the corporate tax rate is 50%. Okay. Now, dear students, you are required to calculate EPS. Okay, and again, for that, two conditions are given. EBIT is the same even after expansion, same in the sense it is 40,000. The second option is EBIT increases by 10,000 after expansion. I hope all of you are understanding the question. It is very much there. Yes, all these problems which I'm working out is from your study material itself. Why? Because if I take a new problem, you will not be able to understand. That is why, let me tell you, these questions, what I'm working out today, everything is there in your study material itself. Okay, this is the problem pertaining to computation of earnings per share. It is from the capital structure decisions chapter. Okay, now dear students, I hope you're understanding. Now, what you need to do is, first of all, you need to calculate the earnings per share. Now, what you need to calculate, you have to compute EPS. Okay, this is the question. Now, what you need to do is you have how many options are given to you? Three options have been given to you. The first option is they want to raise 50,000 rupees. They can raise it in the form of all equity. All equity means they are trying to raise the complete 50,000 by the issue of equity shares itself. So that is called as all equity. Second option is they are thinking of raising this 50,000 through the issue of preference shares. That is completely through the preference shares. They are thinking of raising the 50,000 rupees. The third option is they are thinking of raising 50,000 by the issue of debentures at 10% interest. So, are you all following what I'm trying to tell you? Okay. Okay. So, dear students, what you need to do is the first thing is you have to draw four columns. So, your first column is the particulars, and here in the second column, which are all the options that are available that you need to mention. The first option is the entire amount of 50,000 you are thinking of raising through equity shares. The second option, you are thinking of raising 50,000 through preference shares. The third option is you're thinking of raising the entire amount of 50,000 through debentures. Now, dear students, what you need to do is the first point, as I told you in the proforma itself, you have to consider earnings before interest and tax, which is already given here in the question. So the earnings before interest and tax is 40,000 rupees. So whichever option you're going to take, whether you're going to raise 50,000 through equity shares or preference shares or debentures, first of all, the EBIT will be the same. So it is 40,000 under all the situation. Now, dear students, look at the next point. I told you that from earnings before interest and tax, you have to reduce tax. I'm sorry, you have to reduce interest. Now, please keep in mind, interest will be calculated only for raising money through debentures. If you are raising money through equity shares, you need not pay any interest. If you are raising money through preference shares, you need not pay any interest. But whenever you're raising money through debentures, you have to compute a fixed percentage of interest which have to be paid towards the debenture holders. Okay. Now, dear students, if you look here, see the ABIT is 40,000 under all the situations. Now you're reducing the interest. How are you going to calculate the interest? See, 50,000 is the money that you are thinking of raising. So you have to raise 50,000 rupees because you want to purchase a machinery which is worth 50,000. So 50,000 into what is the rate of this debenture holders? 10%. So 50,000 into 10 by 100, that will give you 5,000 rupees. So you have to deduct 5,000 rupees, which is the interest that will have to be paid to the debenture holders. Okay. I hope you're understanding, everyone. If you do not reply, I will not be able to know whether you're understanding or not. So the first thing is you have to take the earnings before interest and tax, which is 40,000 under all the situation. And then you have to reduce the interest component. Okay. So interest component is nothing but 50,000 rupees, which you're planning to raise through debenture into the percentage, what they've already given, 10%. So into 10 by 100, you get 5,000. Now, dear students, you get earnings before tax. Okay. So, earnings before interest and tax less debenture interest, you get earnings before tax. What is that amount? In the first situation, it is 40,000 because you will not reduce any interest. In the first situation, you're raising the money only with the help of equity shares. So, you need not pay any type of debenture interest. Now, when it comes to preference shares, dear students, you will not be paying any interest because it is the preference shares. But in the third situation, you will be paying debenture interest, which is 5,000 rupees. Okay. Now, after deducting this, you get earnings before tax, which is 40,000 in the first situation, again 40,000 in the second situation, and you get 40,000 minus 5,000, which is 35,000 in the third situation. I hope all of you are understanding. Now, dear students, after reducing the interest, you get earnings before tax. Okay, earnings before tax. Now, after getting earnings before tax, you have to reduce the tax component. Now, how are you going to calculate the tax? See, when you look at the question, corporate tax is 50%. They would have mentioned that. So, what you need to do, you will calculate 50% on EBT. That means in the first situation, the EBT is 40,000. Second situation, it is 40,000. Third situation, again, it is 35,000. So on this, you have to reduce 50%. Why? Because it is the corporate tax that has to be paid. Now, dear students, on 40,000, you will calculate 50%, which is the tax component. So 40,000 into 50 by 100 will give you 20,000. So this is what you have to reduce. Again, in the second situation, 40,000 multiplied by 50 by 100, you get 20,000 here. Okay. Then in the third situation, dear students, 35,000 into 50 by 100, you get 17,500. After deducting the tax, dear students, you get earnings after tax. What is the earnings after tax? It is 40,000 minus 20,000, it comes to 20,000. 40,000 minus 20,000, it comes to 20,000 here. And here it is 35,000 minus 17,500, which comes to 17,500. I hope you're understanding. So once again, so dear students, you will definitely, you can expect a 10 or a 15 mark question in the exam for EPS. So what you need to do is, first of all, try and understand the question carefully. So it says that B Limited company is having 1 lakh equity share capital, which is divided into 10 each. So it is planning to raise the additional amount. You should focus on the additional amount only at the initial stage. You have to focus on what is the additional amount. So the additional amount is nothing but 50,000 rupees. How are they thinking of raising that 50,000 rupees? Option 1, through the issue of 5,000 equity shares of 10 each. Option 2, issue of 5,000 preference shares of 10 each at a rate of 12%. Option 3, issue of debentures at 50,000 at 10% interest. And dear students, the EBIT is 40,000 and the tax rate is 50%. Now I go to the problem. You need to write it as statement showing EPS. Okay, when the EBIT is 40,000. Now, what you need to do, dear students, first you have to take the EBIT. Okay, for all the three situations, EBIT will be the same, that is 40,000. Then you have to reduce the interest component. How do you calculate interest? Interest has to be calculated only for the debenture holders. So please remember, the amount that you're thinking of raising is 50,000 multiplied by 10 by 100. Where will you get the percentage? It is very much there in the question itself. So multiplied by 10 by 100, you get 5,000 rupees. Then you have earnings before tax. This earnings before tax is 40,000 minus, you don't have interest here, so you get 40,000. Here you get 40,000 minus there is no amount, so again you get 40,000. Here it is 40,000 minus 5,000, you get it as 35,000. Okay, and then, dear students, next point is, as I told, sorry, yes. Next point is EBT you get, then you have to reduce tax. Remember, 50% whatever tax rate that they have given, you have to compute that 50% tax on this EBT. So in the first situation, 50% of 40,000 comes to 20,000. Second situation, again 50% of 40,000 comes to 20,000. In the third situation, 50% of 35,000 comes to 17,500. So earnings after tax, EAT, is nothing but it is called as the earnings after tax. Now, dear students, earnings after tax is 20,000, 20,000, 17,500. Now, dear students, please keep in mind, as I've already told you, once you get the earnings after tax, you have to pay the dividend towards the preference shareholders first. Okay, that is called as preference dividend. As I was explaining to you, see, the preference shareholders have to be paid a fixed percentage of dividend. It is not like the equity shareholders. They will be having a preference and a fixed percentage of dividend has to be paid towards them. So, how will you calculate the preference dividend? See, it is 50,000. What is this 50,000? The money that you want to raise, okay, for the machinery, right? 50,000 into 12 divided by 100. That means to say, see, in the question, they would have given 5,000 preference shares of 10 each at the rate of 12%. So what you are doing, 50,000 multiplied by 12 by 100, you get 6,000. And dear students, 6,000 I will reduce only in option 2, not in option 1, not in option 3. Why? Because preference shares amount is going to be raised only in the third option. Okay, so keep that in mind. So that is why I'm going to reduce 6,000. Then I get earnings available to the equity shareholders. Dear students, 20,000 is the earnings available to equity shareholders in the first situation. In second situation here, because you are deducting the preference dividend, 20,000 minus 6,000, you get 14,000. In the third situation, 17,500 minus no amount, 17,500. Now, I hope all of you are understanding till here. We are coming towards the end of that problem. So, I hope all of you have clearly understood this problem. Okay. Now, after earnings available to equity shareholders, dear students, the next very, very important point is you have to divide it by the number of equity shares. Okay, sorry, number of equity shares. Now, how are you going to calculate the number of equity shares? All of you, please listen to me. In the first situation, please remember here, they have given that B Limited already has a share capital of 1 lakh divided into equity shares of 10 each. Now, you need to calculate what is the number of equity shares. So, 1 lakh divided by 10 is nothing but 10,000. So already the company is having 10,000 equity shares. Okay. That is the existing capital which is there with all the options. That means to say, now in this number of equity shares, let us say, what is the existing equity shares? Existing equity shares is 10,000. Okay. So let us say 10,000. For all the options, it is 10,000 because this is the existing capital structure of the company. And then now we are thinking of raising another 50,000 rupees. How? In the first option, through issue of 5,000 equity shares. So in the first situation, along with the existing 10,000 equity shares, we are raising an additional 5,000 shares, which shares equity shares. So the total number of equity shares in the first situation is 15,000. I hope all of you are understanding. But in the second situation, you have existing equity shares of 10,000 rupees, but additional equity shares you're not raising. Why? Because you're issuing completely 5,000 in the form of preference shares. So that is why you will not be having any amount that will be raised in the form of equity shares. So that is why here you get once again. So you don't have any additional equity shares. So you have 10,000 existing equity shares. And dear students, again in the third situation, because you're raising the money with the help of debentures, okay, you will not have any additional equity shares, only 10,000, whichever is the existing equity share, that will be there with the company. Okay, so I hope you're understanding. If you do not reply, I will not be able to know whether you're understanding or not. So at present, in the first situation, there is 15,000 equity shares. In the second situation, there is 10,000 equity shares. And in the third situation, there is 10,000 equity shares. So, dear students, earnings per share is nothing but earnings available to the equity shareholders divided by number of equity shares. So, whatever is the earnings available to equity shareholders, 20,000 divided by 15,000 when you do, you get 1.33. 14,000 divided by 10,000, you get 1.40. 17,000 divided by 10,000, you get it as 1.75. Now, till here, have you understood? So, if you have understood, we can proceed further, or do you people have any doubts? Yes. So, this is about computation of earnings per share. Okay, so earnings per share is nothing but earnings available to the equity shareholders divided by number of equity shares. Okay, so when you do that, you will be getting EPS. Yes, can we proceed? Okay, you want me to explain the last point? Okay, see here. Now from EBIT, you reduced debenture interest only for the debenture holders. Okay, so you get EBT, which is 40,000, 40,000, and 35,000. Then you have to reduce 50% on EBT. That is, you reduce 50% on 40,000, it comes to 20. Again, 50% on 40,000, it comes to 20. And again, 50% on 35,000, 17,500 it comes. Then, dear students, you have reduced the preference dividend only for the second situation. Now, you get earnings available to the equity shareholders. What is the amount? 20,000 in the first situation, 14,000 in the second situation, and 17,500 in the third situation. Now, all of you want to understand this particular point. I think you are a little bit confused about this. Let me explain to you. Dear students, after getting earnings available to the equity shareholders, you have to divide it by the number of equity shares. Now, when you look at the number of equity shares, how will you calculate the number of equity shares? See here, look at the question. See, B Limited company has equity shares of 1 lakh. What is the capital, existing capital structure of B Limited? It is having 1 lakh rupees, which is divided into shares of 10 each. Means the price of one equity share is 10 rupee. Now, for what do you need? You want to know how many number of equity shares are there. How will you find out number of equity shares? See this value, 1 lakh value, when you divide it by 10 rupees, you get 10,000 equity shares. So this 10,000 equity shares is common for all the three situations. Why? Because it is the existing capital structure. In the first situation also 10,000 is there, second situation also 10,000 is there, third situation also 10,000 is there. But when you want to raise 50,000 rupees for this new amount of 50,000 rupees, you are thinking of three alternatives. First alternative is what? Issue 5,000 equity shares. So that is why in the first situation, along with the existing 10,000 equity shares, you are having additional equity shares. What is this additional equity shares? How much you are raising? You are raising 5,000 rupees, which is the additional equity shares. Adre, in the second situation, you are not raising any additional equity shares because you are raising the money through preference shares only. So you will not have any additional equity shares in the second situation. In the third situation also, you will not be having additional equity shares because you're raising entire 50,000 with the help of debentures. That is why what will happen is, if you look at the problem here, see here, number of equity shares is nothing but existing equity shares, which is 10,000 in all the situation, and additional equity shares. This additional equity shares will appear only in the first situation. So the total equity shares in the first situation is 15,000. In the second one, it is 10,000. In the third one, it is again 10,000. So, dear students, EPS is nothing but A divided by B. What is this A divided by B? A is earnings available to the equity shareholders divided by number of equity shares. Andre, whatever this amount is there, right? 20,000, 14,000, 17,000. That you have to divide it by 15,000, 10,000, and 10,000 once again. So when you divide 20,000 divided by 15,000, you get 1.33. 14,000 divided by 10,000, you get 1.40. 17,500 divided by 10,000, you get it as 1.75. Now, I hope all of you have understood this concept. Can we go further? Yes, can we go to the next part of the problem? Okay. Okay. Fine. Let us go to the next part of the problem, right? Now, dear students, we have the second part of the problem. They have given that, see, if you look at the question, uh, see, they say that you are required to calculate the effect of the following finance on EPS if EBIT is the same, means EBIT is 40,000. Next option is EBIT increases by 10,000. Andre, 40,000 is the EBIT. If it increases by 10,000, it is nothing but EBIT will be 50,000. Okay, if you want, I will just work out this. You can have a look at this. Okay, EBIT is 50,000. Now have a look at this, all of you. Let me work out so that you can understand. Now, EBIT, they have told that it will increase by 10,000. Andre, EBIT will be 50,000. So you can put this EBIT in all the columns. It will be 50,000 rupees. Okay. 50,000 in the first situation, 50,000 in the second situation, 50,000 in the third situation. Now, less interest. Now, you know that in the first situation, if you are raising the money, eitherly second partly, they are not giving you any changes. Only thing is the EBIT amount has changed from 40,000 to 50,000 rupees. So EBIT is 50,000, 50,000, 50,000. Now you have to reduce the interest. Interest you have to deduct on what? Debentures. So here in the bracket itself I'm doing, say 50,000 rupees is the additional amount that you have to raise. So our 50,000 multiplied by what is the rate of the debentures? Rate of debenture interest is 10%. So 50,000 into 10 divided by 100, which will give you 5,000 rupees. I am going to reduce that 5,000 only in the third situation. Why? Because only in the third situation we have debentures. Okay. Now, in the first situation, there is no debenture interest. Second situation also, there is no debenture interest. Now I get earnings before tax, which is 50,000. Again, 50,000. Then it is 45,000. Then, dear students, after getting earnings before tax, you have to reduce the tax component. What is the tax component? It is 50%. Okay. So, how will you calculate? 50% of 50,000 will be 25,000. Again, here it will be 25,000. Here it will be, one second, yes, 22,500. 22,500. Just a minute. Yes, 45,000 divided by 2, 22,500. Yes, correct. Okay. Now, after reducing the tax component, you get earnings after tax, which is 25,000 in the first situation. Then again, you have 25,000 in the second situation, and you have 22,500 in the third situation. Okay. Now, dear students, you have to reduce the preference dividend. So you know that preference dividend again will be paid only to the preference shareholders. What is the amount that you're raising? Additional amount, what's Savra? So 50,000 into what is this percentage of dividend that you're going to pay them? 12%. So 50,000 into 12 divided by 100. When you take 50,000 into 12 divided by 100, it will be 6,000, right? So minus ಯಾವ situation ಗೆದು preference shareholders ಇರುತ್ತೆ. Here you have to reduce 6,000 rupees. Okay. Then after reducing that, you get earnings available to the equity shareholders 25,000. Okay. Then here you have 25,000 minus 6,000. How much does it give you? 19,000. And the third situation, 22,500. Okay. Then how will you compute EPS? EPS is equal to earnings available to the equity shareholders divided by number of equity shares. I just now told you how to calculate the number of equity shares. So it will be the same because only the EBIT has changed. So first situation 15,000, second situation 10,000, third situation 10,000. Divided by 15,000. Here it is divided by 10,000. One second. Here it will be again divided by 10,000. Okay. So what will be the EPS for the first one? It will be 25,000 divided by 15,000. So can you tell me the answers? Yes. All of you, please tell me what is the answer. 25,000 divided by 15,000. It will be 1.66. In the second situation, it will be 19,000 divided by 10,000. 1.9. Third situation, 22,500 divided by 10,000. Okay. So it is 2.25. So, dear students, wherever, in whichever situation you get the highest EPS. Now, see, first situation, when you issue only equity shares, you get 1.66. In the second situation, when you issue through preference shares, you get 1.9. In the third situation, when you issue through debentures, you get 2.25. So EPS is maximum when the firm is using the third alternative. So it is always advisable to go in for the third option. Which is the third option? So raising the money with the help of debentures. So this is the most preferred option. So higher the EPS, the better it will be for the company and for the investors also. So that is why the third option is considered as the best alternative. Now, before going to the next problem, are you people able to get the answers? Are you understanding? Yes, dear students, can we go to the next problem then? Okay. Now let's go to the next problem, dear students. Okay. Now have a look at this. A firm has an all equity share capital consisting of 1 lakh ordinary shares. Ordinary shares is nothing but the equity shares of 10 each. That means try and understand this problem. Or by the time you work out this problem, you must be very thorough with this concept. So at present, one particular firm is already having 1 lakh equity shares of 10 each. Okay. It wants to raise an additional 2,50,000. Now, first of all, keep in mind for calculating EPS, for starting with the problem, first keep in mind that they want to raise an additional 2,50,000 rupees. They want to raise. How are they thinking of raising this money? They can think of raising this money through the issue of equity shares. Means they have three options that are available. The first option is they can issue 25,000 equity shares of 10 each. That is the first option. So 25,000 into 10 will give you 2,50,000. Or they have a second option that is available. And the second option is that they can borrow 2,50,000 at 8% interest. And they have another option to issue 2,500 preference shares of 100 each at the rate of 8% dividend. Just a minute. I'll just change the sequence. Yes. Okay, have a look at this. So first one is they are thinking of raising this 2,50,000. One is through the help of equity shares. The second option is with the help of what? Preference shares. The third option is to borrow 2,50,000. That is nothing but the debentures. Okay. Now can we start the problem? You have to calculate the effect of EPS if the EBIT is 3,12,500. So in the first situation, they want to want you to find out EPS when the EBIT is 3,12,500. Second situation when the EBIT is 75,000. First, let us go with the first one, 3,12,500. Now, dear students, try and understand very carefully. There are three options that have been given. Okay, which are the three options? Equity shares, preference shares, and debentures. Okay. Yes. Now have a look at this. As I already told you, the first step is you have to take the earnings before interest and tax. What is the earnings before interest and tax? Of course, in all the three situation, it is 3,12,500. Okay. Now, after taking that 3,12,500, you have to reduce the debenture interest. Okay. Now, dear students, how are you going to compute the debenture interest? See, you have to raise 2,50,000 rupees. Okay. So, this 2,50,000 rupees, what they're doing is, I'm sorry, it's 25 lakhs, 2,50,000. Yes, just a minute. Yes. So what do? You are going to calculate the debenture interest, and please remember that the debenture interest is applicable basically for raising money through debentures. Okay. Just a minute. Yes. So, in case of this, when you reduce debenture interest, 2,50,000 is the money that you want to raise, and you know that the percentage of debt is 8%. It is given in the problem. Okay, 8%. If you want, I will include it here at the rate of 8%. Okay, so now 2,50,000 into 8% will give you 20,000. So I have reduced 20,000 only in the third option, wherein I'm raising the money with the help of debentures. Then I get earnings before tax. What is this earnings before tax? First situation, 3,12,500. Second situation, again 3,12,500. Third situation, it is 3,12,500 minus 20,000, which will give you 2,92,500. Okay. Then the next thing is you have to reduce the tax. Okay. Now, dear students, definitely they would have given you the tax rate in the question. See, assume the tax rate is 50%. So, what you people will do, you're going to reduce the tax on EBT. That is 3,12,500 multiplied by 50 by 100. Okay. When you do that, you get 1,56,250. Here again, 3,12,500 into 50 by 100, you get 1,56,250. Again, here 2,92,500 into 50 by 100, you get 1,46,500. So the earnings after tax, what is the amount? In the first situation, it is 1,56,250. Second situation, 1,56,250. Third situation, 1,46,250. Now, dear students, after getting earnings after tax, you have to reduce the preference dividend. How will you reduce the preference dividend? See, preference dividend is applicable only for the second situation. Okay. And what is the rate of preference dividend? It is 8%. Okay. Even preference dividend rate is 8%. Sorry. So what will happen here? 2,50,000 is the amount that you want to raise. On that, you have to compute 8%. It comes to 20,000. Okay. So here you have to minus this 20,000. Now, dear students, you get earnings available to the equity shareholders. How much is that? First situation, 1,56,250. Second situation, 1,36,250. Third situation, 1,46,250. I hope you're understanding. Now, here it will create a little bit of confusion. Let me explain to you this. Okay. Now, the last step is finding out the number of equity shares. Now, what is the number of equity shares? It will be existing equity shares. Existing equity shares, how much is there? You should see first. Then add additional equity shares. If you have issued any additional equity shares, that should be considered. Okay. See here. What is the existing equity shares? It will be given in the question itself. Okay. Go to the question. See, a firm has equity capital of 1 lakh ordinary shares of 10 per share. Okay. So, what is the value of the equity shares that is there? 1,25,000. Once again. Okay, yeah. It has 1 lakh equity shares. Here, they've already giving how many equity shares are there. Here, directly they've given 1 lakh equity shares is there. So, this 1 lakh equity shares will be applicable for all the three situations, because in all the three situations, it is 1 lakh itself, because that is the present equity structure of the company. Then Additional equity shares. Dear students, when it comes to the additional equity shares, kindly concentrate. See, you wanted to raise around 2,50,000 additional money. How did you raise that? First, through additional issue of 25,000. So here in the first situation, you will be adding another 25,000 rupees. I mean 25,000 equity shares. In the second situation, you're not going to raise it through equity shares, so you will not have any additional amount of equity shares. Even in the third situation, you're not raising it through equity shares. So that is why the total equity shares is, dear students, in the first situation, 1 lakh plus 25,000 equity shares will give you 1 lakh 25,000 equity shares. In the second situation, it is only 1 lakh equity shares. In the third situation, again, it is only 1 lakh equity shares. So now what you will do, earnings available to equity shareholders andre 1,56,250, that you have to divide it by 1 lakh. One second. Yes. 1,56,250, you have to divide it by 1,25,000. How much will you get? 1.25. 1 lakh 36,250 divided by 1 lakh will give you 1.36. Then 1 lakh 46,250 divided by 1 lakh, it is 1.46. Yes. Now, do you think you can proceed further? Can we go to the next part of the question? Have you understood, all of you? So did you come to know how exactly this EPS can be found out? This happens to be a very important component from your exam point of view. I don't see any answers. Okay. Can we go to the next part of the question then? See, the next part of the question, let me work it out. They have given that EBIT will be 75,000. Okay. So only thing is everything remains the same. Only the EBIT will change. Okay. I will work this out. Have a look at this. EBIT. Okay. Okay. See here, EBIT is 75,000. So, first situation, 75,000. Second situation, 75,000. Third situation, 75,000. Okay. Now, debenture interest. What is the debenture interest? It is nothing but 2,50,000 rupees multiplied by 8 divided by 100. 8%. Alva. So, you get 20,000, right? Minus 20,000. Then here minus, I'm sorry, oh, here it is. Okay. So earnings before tax, here you get 75,000. Second one again 75,000. Third one you get it as 55,000. Okay. Then after earnings before tax, you have to reduce tax. What is the rate of tax? 50%. So 50% of 75,000 will give you 75,000 divided by 2. 37,500. Again here it will be minus 37,500. Here it will be 55,000 divided by 2. 27,500. Okay. So earnings after tax will be 37,500. Then here it will be again 37,500. Here it will be 27,500. Okay. Now the dividend. What is the dividend? It will be again 2,50,000 multiplied by 8 divided by 100. So here you will be getting 20,000. Okay. So we get earnings available to equity shareholders. How much is that? 37,500. This situation it is 17,500. And the third situation will be 27,500. Okay. Now, dear students, number of equity shares, I hope you have understood. So, in the first situation, number of equity shares which you have already calculated 1,25,000, 1 lakh, and 1 lakh. So, here 1,25,000. It is 1 lakh. And again, in the third situation, it is 1 lakh. Okay. So, can you tell me what is the EPS, all of you? So 37,500 divided by 1,25,000. 0.30. Second situation, 17,500 divided by 1 lakh. 0.175. Third situation, 27,500 divided by 1 lakh. That is 0.275. Yes. Yes. Have you understood this problem? Yes. The spoil 3.175. Why we are not multiplying 25,000 into 10, whereas in last sum we have 5,000 into 10. For which one you are asking this? Amshika. 25,000 into 10, whereas in the last sum we have multiplied 5,000. What is this? For which one? See the rate, it depends on the rate, whatever is the rate of preferential, rate of the debenture, whatever they've given. Based on that, you need to multiply. See here, in the first situation, in the first problem, they had to raise an additional amount of 50,000 and the rate of debentures was given as 10%. That is why you have multiplied it by 10%. But in this problem, they have given you that the rate of debentures is 8%. That is why you have to take whatever amount you have to raise. 2,50,000 is the amount that you have to raise. That you have to multiply by 8%. For in each problem, whatever is the percentage of, debentures that is given, the percentage of preference shares that is given will not be the same for new equity shares. Yes, okay. For new equity shares, I'll tell you. See, what will happen is, mm, okay, see here, for example, see, it is given that be limited as equity shares of 1 lakh. This is the amount that they have given you. They have not given you what is the number of equity shares. If they have given the value, you have to find out the number of equity shares, because in the first problem they've given be limited as a share capital of 1 lakh divided into equity shares of 10 each. So from the value, when you divide it by 10 rupees, you will get it as 10,000 equity shares. You have to find out the number of equity shares. Okay. Now, when it comes to the next problem, see here, a firm has an equity capital consisting of 1 lakh ordinary shares. Here, they themselves have mentioned what is the number of equity shares. If the number of equity shares is already mentioned, take that directly. But if they've given the value, that it is value of 1 lakh is the worth of the company divided into shares of 10, if they've given, you should find out the number of equity shares. So you have to correctly see if they have mentioned how many equity shares have been given or not. If it is directly given, you have to directly take the number of equity shares. If it is not given, only then you need to find out. Okay. So this is about the next problem. Now, dear students, shall we go to the next problem on EBIT? Shall we work out just one more problem on EBIT and then go to the next concept? Yes, interpretation is required. Dear students, see, whatever may be the EPS that you get, whichever has the highest EPS, that option has to be selected. Okay. So, I think in the material that we have provided, I've given you about the interpretations also. See, here 2.25 was greater, so it is better to raise capital through debentures, you have to mention. In the next option, again, you have 1.46, which is greater. So it means to say wherever the EPS is higher, that particular option is always recommended, that you can mention. Now we'll just work out one more problem on this and then go to the next topic. Okay. All of you have a look at this. And you have to show the workings, okay? That is for calculation of interest on debentures, calculation of the preference dividend, all that. Somewhere you can show the working, which will fetch you better marks. Now, the next problem. Gurudat Limited has equity share capital of 5 lakhs divided into shares of 100 each. Okay, it has a, see here, it has equity share capital of 5 lakhs. They're not telling you they have equity shares of 5 lakhs. They have share capital of 5 lakhs, and the price of each share is 100 rupees. So you have to find out later on how many equity shares are there. Okay. Now, what is the new plan? They want to raise another 3 lakh rupees. How they are planning to raise this 3 lakh rupees? Four options are available, dear students. See, such type of problems can also be asked. Be very careful. So they want to raise 3 lakh rupees, and that 3 lakh rupees they can raise it either through complete equity shares, entire 3 lakhs through equity shares, or have a look at the split up. 1 lakh they will raise it in the form of equity shares, 2 lakhs in the form of debentures at 10% per annum. This is the second option. Third option, all debentures at 10%. See, this Gurudatta Limited, this happens to be a question paper problem. Okay, so this has been repeatedly asked in some of the previous annual schemes question paper. So this is again a very important one. So if you understand this, I think any problem on EPS you can work out. Okay. Yes, have a look at this. So the third option is the entire amount of 3 lakhs you can raise through issue of debentures at 10%, or you can raise 1 lakh through equity shares, 2 lakh through preference shares with a dividend of 8% per annum. First, you need to understand the question, only then you can work out correctly. Now, the EBIT is 1,50,000 rupees. The tax is 50%. Yes. Shall we start with the problem? These are all the workings which I've already given to you in the material. So these workings, if you go through, you can easily understand. But this calculation part, we will do it now. Okay? Just a minute. Yes. So this is the options, dear students. See, we have different financial plans. What is the amount that they are planning to raise? 3 lakh rupees they are planning to raise. And the first option is they want to raise it through completely through equity shares. Second option, equity plus debentures. Okay. Here, if you want to be more clear, if you want more clarity, you can write down. That is 1 lakh in equity shares. The second option, 1 lakh in equity shares is what they're thinking. Okay. And 2 lakhs through debentures of 10%. If you want, I mean, if you don't want to have any doubts, you can mention it here itself. Then all debentures, that is the entire 3 lakh rupees, they want to raise it through debentures. And the last option, equity and preference is there. So they want to raise equity shares of 1 lakh. I hope all of you understand it. I'm sorry. Okay. So one more option is to raise 1 lakh rupees through equity shares and 2 lakhs to preference shares with 8%. Okay. So rupees 2 lakhs. Preference shares 8% dividend. Okay. Shall we start? What is the EBIT that they have given? EBIT is 1,50,000 rupees. Okay. 1,50,000 rupees. 1,50,000 rupees. Then debenture interest. What is the debenture interest? Now, dear students, wherever there is debentures, only there you can calculate debenture interest. Here it is all equity. Here, look at the second one. You have equity shares and debentures. So, in this concept, you can calculate, but only for 2 lakh rupees, you can calculate the debenture interest. So, it will be 2 lakhs multiplied by 10 divided by 100. How much does it comes to? 20,000 minus 20,000. Here you don't all debentures. So 3 lakhs, entire 3 lakhs will be raised through debentures. So here if you can see in the question, all debentures at 10%. That means to say 3 lakhs into 10 by 100, it will be 30,000. So minus 30,000. In the last option, dear students, you who don't have debentures, it is only equity plus preference shares. So it is nil. Okay. Now, what is the earnings before tax? It is 1,50,000 in the first situation, 1,30,000 in the second situation, 1,20,000 in the third situation, 1,50,000 in the fourth situation. Now, tax. What is the rate of tax, dear students? The rate of tax is given as 50%, right? 50% is the corporate tax. So 50% of 1,50,000 comes to 75,000, if I'm not wrong. Then for 1,30,000, you have to compute 65,000. For 1,20,000, it will be minus 60,000. Minus 75,000. Okay. Now, what is the earnings after tax, dear students? It will be 75,000. Here it will be 65,000. Here it will be 60,000. Here it will be 75,000. Okay. Then you have to reduce the preference dividend. Now, for which all situation, here it is on all equity, you can't take preference dividend. Equity plus debt, you can't take preference dividend. All debt, you can't take preference dividend. For preference shares, here 2 lakh in preference shares of 8% dividend. So on 2 lakhs, 8% comes to 16,000. So minus 16,000. Okay. What is the earnings available to the equity shareholders, dear students? It is 75,000, 65,000, 60,000, and what is 75,000 minus 16,000? 59,000. Okay. Now, the most important, the turning point of the question, number of equity shares. I hope all of you are listening to me. You have to find out the number of equity shares. All of you look at the problem. So, Guru Datta company has equity shares of 5 lakhs. This is a share capital, not the number of shares. 5 lakh equity capital divided into shares of 100 each. So, 5 lakh when you divide it by 100, you get 5,000 equity shares. Okay. See, 5 lakh divided by 100 gives you 5 lakh equity shares, which is there for all of the company, options. So, what you should do is, see here, I'll make the subdivision. Existing equity shares. Existing equity shares. ಎಷ್ಟಾಗುತ್ತೆ 5,000 for all the situations. It is the same. Okay. So 5,000, 5,000, 5, sorry. See, it is better if you take the hard copy of the material and also have a calculator with you for all the FM classes so that you can understand what is happening. ಮತ್ತೆ 5,000. Okay. Now, apart from this existing equity, what is the new equity shares that have been raised? Where all it will come? Have a look at this, dear students. First situation, all equity and the so that means whatever 3 lakh rupees is there, you are going to raise it in the form of equity shares. Since they have not given what is the price of each equity shares, here whatever is given in the previous one should be assumed 100 rupees. So again, 3 lakh rupees divided by 100, it gives to 3,000. So 3,000 equity shares will be the new equity shares under situation 1. Now, dear students, have a look at this. In the second option, 1 lakh is raised in the form of equity. 1 lakh divided by 100, how much? 1000. Third situation, Ella debentures this, so you don't have any additional equity shares. Dear students, again, the last situation, 1 lakh you're raising in the form of equity shares. 1 lakh divided by 100 is again 1000. So, what is the total equity shares in the first situation? 5,000 plus 3,000 is 8,000. Second situation, 5,000 plus 1,000, 6,000. Third situation, 5,000 plus no other additional equity, so 5,000. Last situation, 5,000 plus 1,000, 6,000. Okay. So how are you going to compute EPS? EPS is equal to earnings available to the equity shareholders divided by the total number of equity shares. That is 8,000, 6,000, 5,000. Okay, 6,000. Okay. Now, tell me what is the EPS? EPS will be 75,000 divided by 8,000, which comes to 9.37. Second situation, 65,000 divided by 6,000, which comes to 10.83. Third situation, 60,000 divided by 5,000, it comes to 12. Last one, 59,000 divided by 6,000, 9.83. Of course, when you look at the interpretation, you can find out that 12 rupees, okay, earnings per share is 12 rupees. So, third option, which is a combination which has only debentures. So, if you raise the entire additional amount of capital through the debentures, you will be getting better EPS or better earnings per share. So, which option can be considered as the best? The third option. See here, EPS is maximum for the third financial plan. So 3 lakh has to be collected as a debt. Through debt, if you collect it, it will be very, very, very advantageous. Okay. So I hope you people have understood the problems on earnings per share. Yes. Yes, dear students, have you understood the concept of EBIT, computation of EPS? So only debenture interest you should consider in those situations only wherein you have issued debentures. Preference dividend you have to consider only in those situations where there is preference shares. Okay, these concepts you have to keep in mind. And then you, while calculating EPS, you have to consider the total number of equity shares, that is the existing equity shares, as well as is there any additional equity shares that has been raised. All that you need to consider. So now can we go to the next topic? Yes, there is two more problems, but if you have understood, we can go to leverages. Yes, all of you have understood the concept of earnings per share. Can we go to leverages? Yes. Okay. Okay, dear students. Now let us go to the next concept. I'm mainly focusing on those problems which is important from your exam point of view. Okay. Now, I think all of you have heard of the concept of leverage. What is this leverage? Dear students, I was telling you time and again that the capital structure of a company depends upon a combination of various avenues. That means to say, just now in the problems that we were working out, all of you saw very clearly that we can think of having only equity share capital, we can think of having a combination of equity shares and debentures, we can think of raising the money only with the in the form of debentures, or we can have a combination of debentures and equity. So many options were available. But when you see the problems, dear students, you can find out that wherever you have made use of debentures more, in that situation, you are able to earn more earnings per share. Are you understanding? So the term leverage is nothing but it means to say you are going to make use of debentures. You are going to make use of borrowed money. Debentures are nothing but, I told you in the first class itself, debenture holders are the creditors of the company. They are not the owners of the company. They are the people who are the creditors of the company. You have to pay them a fixed percentage of interest. But if you go through the problems which we have worked out, you can see that in most of the 99.99 percentage of the situation, wherever debentures have been used, in all those situations, the earnings per share of the company will be high. So leverage is nothing but we are going to make use of debentures in the capital structure of the company. Now, dear students, with regard to leverages, you may be having problems on computation of operating leverage, financial leverage, and combined leverage. Okay, so sometimes direct questions will be asked, and sometimes the questions will be twisted, slightly twisted and asked. So you people have to understand the complications of the problem, and then you can go ahead, okay, with working out. Now, first of all, let us see what is operating leverage and what is the formula to calculate operating leverage. Operating leverage occurs when a firm has fixed cost which must be recovered irrespective of the sales volume. The fixed cost remains the same. The percentage change in EBIT will be more than the percentage change in the sales. Now, rather than going too much conceptually into what is operating leverage, please understand the formula for computation of operating leverage because it will be mostly of problematic type. So operating leverage will be contribution divided by operating profit. Dear students, all of you please keep in mind whenever the term operating profit is used, operating profit is nothing but earnings before interest and tax. So you people should know this formula very clearly. Whenever you're asked to find out the operating leverage is nothing but contribution divided by operating profit, or it is also called as EBIT. Okay. Next, you have financial leverage. This is a second type of leverage, dear students. More than going into the theory part, let us see the formula of financial leverage. Financial leverage is equal to EBIT divided by EBT, that is, earnings before interest and tax divided by earnings before tax, will give you the answer for financial leverage. Then we have combined leverage, dear students, or the composite leverage. So whether it is combined or composite leverage, the formula is contribution by EBT. Okay. Now, let us look at this proforma. Now, I told you that sometimes all the information will be very clearly given to you, and they will directly tell you compute financial leverage, compute operating leverage, compute financial, or combined leverage. So, what you will do directly, you will make use of whatever concepts have been given, and you will directly find out the answer. But sometimes I told you that they can also twist the question and give you. So that is about this particular format. Dear students, please look at this format very carefully. Half of the format you already know, only a few parts you need to know. Now, see, almost from here to here, I've already told you. Just a minute. Yes. Dear students, first, if the sales value is given, you have to say, take the sales. From the sales, you have to reduce the variable cost. Dear students, please keep in mind, sales minus the variable cost will give you contribution. Sales minus variable cost will give you contribution. From that contribution, if you reduce the fixed cost, you will be getting operating profit, or what is called as earnings before interest and tax. So, all of you, please keep in mind that this format is very important. So, when sales is given, first take the sales, reduce the variable cost. When you reduce the variable cost, you get the contribution. That minus the fixed cost will give you the operating profit or earnings before interest and tax. From here, it is the same, dear students, as I told you. From EBIT, you have to reduce interest. Which interest will you reduce? Of course, the debenture interest. Then you get earnings before tax. Then you have to reduce the tax. Then you get earnings after tax. Then you have to reduce the preference dividend. Then you get earnings available to the equity shareholders. Okay, you need not go to EPS, only till earnings available to equity shareholders, it is sufficient. Now, let us directly go to the first problem. Have a look at this. The following is the details. Compute operating leverage. Now, first of all of you must be knowing operating leverage is contribution divided by EBIT. This is the first thing that you people should know in your mind. Okay. Just over there. Let me insert this equation as such. Okay, that's by y divided by. Okay, that is EBIT. The contribution divided by EBIT. Yes. So the formula to compute operating leverage is contribution divided by EBIT. Yes. Now let us start. Yes. Now they have given the sales price as 20 rupees per unit. So they've not given you the selling price, they've only given you the selling price per unit. The total sales they have not given, you have to find out. Variable cost per unit is 12 rupees. Actual sales is 200 units. The installed capacity is 300 unit. Fixed cost is 1000. Fixed cost is 800. That means they've given you two classification. When the fixed cost is 1000 rupees, they want you to find out the operating leverage. When the fixed cost is 800 rupees, they want you to find out the operating leverage. Dear students, have a look at this. I told you, first you have to take the sales. How will you take the sales? Sales is nothing but the actual sales, 200 units multiplied by the selling price. Okay, it is nothing but if they say the selling price of one unit is 20 rupees, find the sales, total sales. So 200 units multiplied by 20, this will give you the sales value, 4,000 rupees. Same in both the cases. Then from the sales, dear students, I told you, you have to reduce the variable cost. How will you calculate the variable cost? See, they've given you the variable cost per unit is 12 rupees. So 12 rupees multiplied by actual sales, that is 200 units is there, right? 200 multiplied by 12, it comes to 2,400 rupees. So sales minus variable cost, you get the contribution. That means 4,000 minus 2,400, 4,000 minus 2,400. So contribution in the first case is 1,600. Contribution again in the second case is 1,600. Now, while reducing the fixed cost, dear students, they've given you two options. The first option is 1,000 rupees, the second one is 800. And remember, fixed cost is an amount which need not be multiplied by anything. Like, see, for variable cost, you might multiply the variable cost per unit into the sales per unit, right? So your fixed cost will be directly given. So if you look at the question, in the first situation, they've given it as 1,000 rupees. Second situation, they've given it as 800 rupees. So when you minus that, you get earnings before interest and tax. So dear students, you have 600 in the first situation, 800 in the second situation. So what you people should remember is, after making this minimum calculation, you have to think about the formula. So I told you that the formula to compute operating leverage is nothing but, it is very much here, contribution divided by EBIT. Yes. So operating leverage is equal to contribution divided by EBIT. What is the contribution? 1,600 divided by 600. Just a minute. Yes. When you do it as, it's not taking properly. Just a minute. Yes, dear students, contribution is 1,600 divided by EBIT, which is 600. So 1,600 divided by 600 will give you 2.67. Okay. Now here in the second situation, it is on the similar lines. It is 1,600. Excuse me. Yes. So 1,600 divided by 800, you will get it as 2. Okay. So this is about the operating leverage. Are you understanding? Yes, dear students, are you understanding this problem? Okay, once again, I will explain to you. See here, first thing you should remember is, you will be having problems on leverages. So there are three types of leverages. One is called as the operating leverage, one is called as the financial leverage, and the other is called as the composite leverage. Okay. Now, first of all, you have to clearly understand what is the formula of each of this. Okay. What is the formula of operating leverage? What is the formula of financial leverage? And what is the formula of composite leverage? Now, operating leverage is nothing but contribution divided by EBIT. So now here, what I told you is sometimes they will directly give you the values and they will tell you to find out the leverages. But on the other hand, sometimes what they will do, they will ask you to make some calculations. Now, as I showed you in this proforma, what you need to do first, you have to take the sales value. You have to reduce the variable cost. When you take sales minus variable cost, you will get the contribution. From that contribution, when you reduce the fixed cost, you will get EBIT. EBIT less interest will give you EBT. EBT less tax will give you EAT. Less preference dividend will give you equity shares, earnings available to equity shareholders. The same way, dear students, in this problem, you have to start with the sales. How will you start with the sales? Sales is nothing but the selling price per unit is 20 rupees. The actual sales, whatever they've given us, 200 units. So 200 into 20 will give you 4,000 rupees under both the situation. Less, you have to reduce the variable cost. How will you calculate the variable cost? Again, the actual sales multiplied by the variable cost. So 12 into 200, you get it as 2,400. Now, when you reduce the sales minus the variable cost, you are getting the contribution, which is 1,600. Then you're going to reduce the fixed cost. Okay, fixed cost in first situation they're telling it is 1,000. Second situation it is 800. So earnings before interest and tax is 600 in the first situation. It is 800 in the second situation. Now directly put the formula. Operating leverage is equal to contribution divided by EBIT. You know that the contribution in the first situation is 1,600 and EBIT is 600. So 1,600 divided by 600 will give you 2.67. Here 1,600 divided by 800 will give you 2. Okay. So this is about the computation of operating leverage. Just a minute. Now let us go to the next problem also. Okay. The second problem is a little bit tricky. Have a look at this. From the following information relating to the operating and financial structure of DTS Limited, calculate the operating and financial leverage. What they're telling you, first of all, they're telling you to compute the operating and financial leverage. Okay, under situation A, B, and C, and financial plans 1, 2, and 3, respectively. Also, find out the combination of operating and financial leverage. Okay. Now, dear students, have a look at this. They have given you the installed capacity is 12,000. Okay. Just a minute. Okay, installed capacity is 12,000. Actual production on sales is 800. Actual, whatever is given as actual, that is very important. Variable cost is rupees 100. Selling price per unit is 150. Dear students, they have given you three situations. In one situation, the fixed expenses, that is nothing but the fixed cost is 10,000. The second situation, again, the fixed cost is 20,000. The third situation, the fixed cost is 30,000. Along with that, they have given you the financial capital structure. Okay. In the first plan, you have equity of 75,000, debentures of 25,000. Second plan, you have 50,000 equity, 50,000 debentures. Third plan, you have 25,000 equity and 75,000 debentures. Okay. Now let us see. Just a minute. Fixed expenses. Okay. Now, there are different situations that have been given, dear students. You have situation A, B, and C. Now, first of all, for all the three situations, you have to calculate what is the operating leverage. Okay. First one. Just a minute. Now, see here. you have the sales revenue. How are you going to calculate the sales revenue? See, it is nothing but whatever is the actual production and sale. 800 units have been given. 800 multiplied by the selling price per unit. So if you multiply 800 into 150, 800 multiplied by 150, how much will you get? 800 multiplied by 150, so you get 1,20,000 rupees. Okay, so all of you please look here. So what is the sales value? Sales value is nothing but whatever is given in the form of actual production and sales. The actual sales, how much sales they have made? They have sold 800 units. What is the selling price per unit? It is 150 rupees. So here 800 into 150 will give you 1,20,000 units. So for all the three situations, situation A, situation B, situation C, you are able to get 1,20,000. Now next, dear students, you have to reduce the variable cost. How will you reduce? See, variable cost is 100 rupees. So 100 rupees again has to be multiplied by this units, that is 800 units. So 800 multiplied by 100 rupees will give you 80,000 in the first situation, 80,000 in the second situation, 80,000 in the third situation. But don't worry, as we work out more problems you can understand. So sales minus variable cost will give you the contribution, dear students. So 1,20,000 minus 80,000 will give you 40,000 in the first situation. Then 1,20,000 minus 80,000 will give you 40,000 in the second situation. 1,20,000 minus 80,000 will give you 40,000 in the third situation. And then what you need to remember is the fixed cost, dear students. Fixed cost is being given under three situations. That is why you're working out A, B, C. Why? Because under situation A, they've given the fixed cost is 10,000. Second situation, it is given as 20,000. Third situation is just given as 30,000. So here, when you reduce fixed cost in the first situation 10,000, okay, second situation it is 20,000, third situation it is 30,000. So here you get EBIT 30,000, 20,000, 10,000. Dear students, please keep in mind operating leverage, as I already told you, is contribution divided by sales minus variable cost. So contribution divided by sales minus variable cost will give you EBIT. 40,000 divided by 20,000 will give you 2. 40,000 divided by 10,000 will give you 4. So this is the operating leverage. That is the operating leverage, dear students. Yes. I hope all of you are understanding. So three different situation, okay, has been given. So you always have to consider whatever is the actual sales. See, the installed capacity means like it may be the capacity of that machinery, okay, to produce a certain number of units. So we are not going to consider whatever is the installed capacity, only whatever is the actual sales units that you have to take into consideration when you're working out any of the problems. Okay, so what you need to do is, I told you that operating leverage is nothing but it is contribution divided by EBIT. So dear students, what you people have to do is you will take the sales revenue, that will be nothing but the actual sales volume multiplied by the sales price, Then you have to reduce the variable cost. When you reduce the variable cost, you will be getting the contribution. From the contribution, you have to reduce the fixed cost. Now, dear students, keep in mind, in some of the problems, it will be like only one fixed cost is there. Then you need not consider situation B and C. But here they have given you in the problems that there are three situations. One, the fixed cost is 10,000. Second, it is 20,000. Next, it is 30,000. That is why you have worked out under three situations. So you will get the operating leverage, which is nothing but the contribution divided by the EBIT. Dear students, another name for EBIT is the operating profit. Okay. So if you have understood this, we can go to financial leverage. When you're working out financial leverage, some more calculations are there. So you need to be very careful. Yes, have you understood about operating leverage? Can we go to the financial leverage? Okay. Yes. Now, dear students, see, the problem is that in operating leverage, you will be taking contribution divided by EBIT. But in financial leverage, what is the formula? For financial leverage, it is EBIT divided by EBT. Okay. So because it is EBIT divided by EBT, there are some calculations which you have to do very carefully. Like, for example, now here, when you worked out this operating leverage, you found out what is EBIT. But EBIT, you're having three EBITs. Why? Because first, when the fixed cost was 10,000, you got operating profit of 30,000. Second situation, when the fixed cost was 20,000, you got EBIT 20,000. Third situation, when the EBIT was, I'm sorry, fixed cost was 30,000, you got 10,000. So you have three EBITs. One is 30,000, 20,000, 10,000. And dear students, see, they have given you about the financial capital structure, equity debt they have given. All that you should, include when you're taking financial leverage. Okay, you will understand as I explain more problems. Don't worry. See here, statement showing financial leverage. In this situation one, you have got the EBIT as 30,000. Dear students, the EBIT is 30,000. You also have to calculate what? You have to calculate EBT, because you know very clearly that for financial leverage, the formula is EBIT divided by EBT. So now, from this EBIT, what should you reduce? You have to reduce the debenture interest. How will you reduce the debenture interest? Have a look at the question. Yes. See here. Situation one, you are thinking of raising 75,000 through equity, 25,000 through debt. First situation. So that is why, yeah, the cost of debt is also given as 12%. So that is why what they have done is they have taken 12% of, what is the amount? 25,000. Yes, 3,000. Dear students, listen to me again, once again, carefully. See, when you were finding out the operating leverage, you had three situations. That is when the fixed cost was 10,000, when the fixed cost was 20,000, when the fixed cost was 30,000. So now you have three EBITs. Okay, one is 30,000, 20,000, 10,000. Now, for these three EBITs also, you have to find out what is the EBT. How will you find out EBT? And that too what? You have three financial situations that they have given. The first financial situation is when, yeah, first plan. See here, equity 75,000 there, debt 25,000 is there, cost of debenture is 12%. So here what they have done is they have computed the debenture interest, which is 25,000 multiplied by 12 divided by 100. So you get 3,000 rupees under plan 1. Okay. Plan 2. What is plan 2? You have 50,000 in the form of equity, 50,000 in the form of debentures. So under plan 2, you have 50,000 multiplied by 12 by 100. All these problems you have to continuously work out at home. Otherwise, you will not be able to do well. So if you practice more number of problems, it will not at all be a problem for you. So it comes to 6,000. If you look at the third plan, dear students, you have 25,000 equity and 75,000 debt. Now, why are you breaking your head so much only for financial leverage and not for operating leverage? Is that for financial leverage, you have to find out EBT. So, what you need to do, EBIT less the debenture interest has to be done for you to get the EBT. For that, under different situations, you are trying to calculate what is the EBT. Okay, multiplied by 12 divided by 100. This will again give you 9,000 rupees. Okay, so dear students, I hope you are understanding. So EBT is 27,000, 24,000 and 21,000 respectively. Okay, so financial leverage, that to look at the, I mean, complexity of this problem, you have to work out when the EBIT is 30,000 with the different debenture concepts. Again, when the EBIT has become 20,000, again for all the plans you need to work out. It is like that. But if you understand till here, I can go to the next part. So what you have to do, EBIT for finding out the financial leverage, dear students, you have to take the formula operating profit, that is nothing but EBIT divided by EBT. Okay, so financial leverage is equal to, let me insert the formula, EBIT or operating profit, both are the same. Okay, uh, or it is also called as operating profit divided by EBT. Let us not confuse ourselves. Uh, yes, EBIT divided by EBT. If you can remember once again. So financial leverage is equal to EBIT, all in capital, divided by EBT. Okay. So till here, if you understand, the next one we can continue tomorrow. See here. So financial leverage is nothing but EBIT, that is 30,000 divided by 27,000, which will give you 1.11. In the second situation, 30,000 divided by 24,000, which will give you 1.25. The third situation, 30,000 divided by 21,000, which will give you 1.429. Okay, so dear students, till here have you understood? Everyone, I'll just repeat this once again, everybody. If you can concentrate on it. Okay, we'll go from the beginning. Yes. So, dear students, as I told you, you will be having problems on leverages. So, you have combined leverage, you have financial leverage, you have composite leverage. The first thing that you need to know is they will generally, the questions will not be asked directly. You will have to make some calculations. So, this is the proforma, okay, or the format for calculating of leverages. First, you have to consider the sales, okay, whatever is the total sales value you have to take. From that, you have to reduce the variable cost. So, dear students, when you take the total sales value and when you reduce the variable cost, you will be getting something called as the contribution. Now, from that contribution, you have to reduce the fixed cost. If the fixed cost is reduced, you will get what is called as the operating profit. This operating profit is also called as earnings before interest and tax. And then from this, you will be reducing the interest component. Then you get earnings before tax. After you get this earnings before tax, you will be reducing the tax component. Then you get earnings after tax. And from that, when you reduce the preference dividend, you will be getting earnings available to the equity shareholders. So the first thing is the entire format, you have to have it in your mind. Only then you can work out the problems correctly. Okay. And you should also know the formula for computing all the three types of leverages. Now we were working out the first problem in which they had given you to compute the operating leverage. They had given you whatever is the sales per unit. They have given you the variable cost. They'll give you the actual sales. Dear students, don't consider the installed capacity. It must be what is the actual sales that the company has made. That is what is very important. Okay. And see, if they've given only one fixed cost, you can work out under one single column. Okay, this column would not have been required. But because they have given two fixed costs, that is, one fixed cost is 1,000 rupees, the other fixed cost is 800 rupees. That is why the two columns were taken. So, what you did in the first situation, you took the sales, that is nothing but the selling price per unit into whatever is the sales, okay, number of units that you have sold. When you multiply, you got it as 40,000. Then you reduce the variable cost. Now, how do you calculate the variable cost, dear students? Of course, 12 rupees per unit multiplied by the actual sales in units. Okay. So 200 into 12, you get it as 2,400. So you get the contribution, which is 1,600 rupees in the first situation, 1,600 in the second situation. Then, dear students, the fixed cost, of course, for the first situation, it is given as 1,000 rupees. The second situation, it is given as 800 rupees. So, when you reduce that, you get earnings before interest and tax, which is 600 rupees and 800 rupees. Now, you have to compute operating leverage. Very easy. You have to take the contribution divided by EBIT. So, 1,600 is the contribution here. Divide that by the EBIT, you get it as 2.67. Of course, even in leverages also, okay, you will have to write the formula, especially, okay, when you're making the calculations. This is a very important one. Write the formula, then do the calculation. So you get it as 2.67. Again, here you get it as 2. Okay. And then this is about computation of what is that, operating leverage. Yes, in the next problem which we were just now doing, dear students, they asked us to find out the operating and the financial leverage. Now, the same way they had given the installed capacity, they've given you the actual production and sales, they've given you variable cost and selling price. Just like the previous problem, they've given you three fixed expenses. Now, in the previous problem, they had given you two fixed expenses. Now, three situations they've given. But along with that, they've given you something about the capital structure. Capital structure is mainly given mainly for computation of financial leverage. Okay. So here in operating leverage, you started off. Why did you take three situation? Because in the previous problem, they had given you two fixed cost. In the third situation, they've given you three fixed cost. So what you did? Sales you found out, that is nothing but the number of actual sales into selling price per unit. So you get 1,20,000 under all the situation. And the variable cost, dear students, they've given you as 100 rupees. So 100 rupees into 800, you get it as 80,000 rupees. So sales minus variable cost, dear students, will give you contribution. Then you have to reduce the fixed cost. Of course, situation one, it is different, that is 10,000. Situation two, it is different, it is 20,000. Situation three, it is different, it is 30,000. Okay. So when you reduce contribution minus fixed cost, you will be getting what is called as the operating profit. So the operating profit is 30,000, 20,000 and 10,000. Dear students, operating leverage is contribution divided by EBIT or operating profit. So it is nothing but 40,000 divided by 30,000, which will give you 1.33. Second situation is 40,000 divided by 20,000, which will give you 2. The third situation, 40,000 divided by 10,000, you have 4. Okay. So, dear students, I hope so much you have understood. So, in the next class, okay, that is in tomorrow's class, I will try to complete the components of leverages, and we will go to the next topic, which is capital budgeting. Of course, dear students, capital budgeting happens to be one of the very important chapters for your examination, because you can always expect one or two questions out of capital budgeting. That is, I think you people have heard about payback period and also the NPV method, IRR method. That is very important from your examination point of view. So in tomorrow's class, I will try to complete the concept of leverages, and we will go forward with capital budgeting decisions. Okay. I hope you people are understanding. Thank you, one and all.